The broadcast is now starting. All attendees are in listen-only mode.
Hello, this is Jennifer Schaus coming to you live from Washington, D.C. We are continuing in our government contracting webinar series. Thanks everybody for joining us today. We are lucky enough to be joined by Mark Amadeo, who's going to be talking about FAR flow-down clauses. All of our webinars are complimentary. The full list can be found on our website under the webinar section. All of the recordings can be found below the schedule, and those are segmented by topic. A little bit about us. We're based in downtown DC, provide various services for contractors, anything from market analysis reports, 8A certification, GSP schedule help, contract admin, and proposal writers on an a la carte or as needed basis. Throughout the year, we host networking events, seminars, and conferences. You can find those on our website under the events section, or an easier way is to go to our website, sign up for the newsletter, which is under the Contact Us tab, and you'll be notified of everything and anything that we're doing. A little bit about me here, but more importantly, I'd rather talk about Mark Amadeo, who is a government contracts attorney. We've done a lot of webinars with him. He's been a sponsor of many of our events. So thanks, Mark, for joining us today and talking about FAR flow-down clauses. I'll hand the floor over to you.
Great. Thanks, Jennifer, and thanks for having me. Thank you to everyone for joining us. So there's information about me on the slide, and my contact information is up there as well. So if you have any questions, feel free to reach out to me. A little bit about the law firm. The Amadeo Law Firm has offices at 3 locations. Its primary focus is on federal government contracting, and with the federal national practice, the firm's clients have come to the firm from all over the country. We help startups, entrepreneurs, mid-sized and large Fortune 200 companies, and we help clients with all of their government contracting legal needs, from cementing relationships through teaming agreements, subcontracting agreements, and joint ventures, to negotiating contracts with contracting officers, assisting with contract modifications, the whole gamut of legal services that government contractors need. So today we're talking about flow-down clauses. Now, before we get too far along, no pun intended, well, maybe just a little, let's talk about what we mean by flow-down clauses. What we're talking about are clauses in a government contract with a prime contractor that are also part of a contract between the prime contractor and its subcontractors. So a flow-down clause has the effect of flowing down conditions and obligations that are on the prime contractor and imposing those conditions on the subcontractor. Now, most often in federal government contracting, the clauses that tend to get flowed down from the prime contract to the subcontract are clauses that a contracting officer is required by regulations to insert into the prime contract. And these regulations impose, the regulations that impose these requirements are namely the Federal Acquisition Regulation and the Defense Federal Acquisition Regulation Supplement. But flow-down clauses can also come from clauses that are required to be inserted into a prime contract by an agency rule. Now, we'll get into the mechanics of how flow-down clauses are inserted in just a little bit. So there are basically 2 kinds of flow-down clauses. There are mandatory flow-down clauses, and these are clauses that are required to be flowed down from a prime contract to a subcontract. But there are also optional flow-down clauses, and these are clauses that are included in a prime contract that are not required to be flowed down, but that should be flowed down anyways. Now, the most common mandatory flow-down clauses in federal government contracts are clauses that are required to be flowed down to subcontracts by FAR and DFARS. So stepping back a little bit, the Federal Acquisition Regulation, or FAR, sets out the government contracting rules for agencies, contracting officers, and government contractors, while the Defense Acquisition Regulation Supplement, or DFARS, is a supplement to FAR that contains additional rules that contractors have to follow when they contract with Department of Defense agencies. So often the regulations under FAR and DFARS will set out a rule that the government contracts and government contractors have to comply with. For example, there may be a FAR or DFARS regulation that requires contractors to comply with federal labor or equal employment opportunity laws. Now, to make sure that these rules are complied with, the implementing regulation under FAR or DFARS often will require a contracting officer to insert into a government contract like a particular FAR or DFARS clause. And these FAR and DFARS clauses have boilerplate language that incorporates the rule so that the rule becomes a term of the government contract. Now, Part 52 of the FAR lists all of the possible FAR clauses that can be inserted in a government contract, while Part 252 of DFARS lists all of the DFARS clauses that can be inserted by a contracting officer. And if you look at a particular clause in FAR Part 52 or DFARS Part 252, the clause will almost always refer to the implementing regulation that requires the contracting officer to insert that clause into a contract. And sometimes, if there is some ambiguity about a clause or whether it should flow down, it can be helpful to go back to the implementing regulation. But getting back to FAR and DFARS, the clauses themselves, the mandatory flow down provisions always come in the form of an instruction in the clause to contractors to include the clause in their subcontracts. So this instruction is typically in a separate subparagraph in the FAR or DFARS clause, which, not coincidentally, is often titled subcontracts. So if a clause has a mandatory flow down provision that requires the prime contractor to include the clause in a subcontract, a prime contractor needs to know what kinds of agreements are considered subcontracts that clauses have to be inserted into. Well, Part 44 of FAR is the part of FAR that sets out the subcontracting rules, and it defines a subcontract. And under that definition, a subcontract means any contract entered into by a subcontractor to furnish supplies or services for the performance of a prime contract or subcontract. So a subcontractor must furnish supplies or services that are used for the performance of a contract. Now, the definition of subcontract explicitly includes purchase orders and changes and modifications to purchase orders. So if you enter into a large purchase order of supplies or equipment in order to perform under a prime contract, well, that purchase order is considered a subcontract. Now, what if you order something online, or you go to a local store, you buy supplies or software that you're going to use during contract performance? If there's a mandatory flow down clause in your prime contract, does it apply to your purchase, and how would you include that in the clause? Well, to answer that question, you have to go back to the definitions. A subcontract must be a contract, and a contract is defined in FAR as a mutually binding legal relationship obligating a seller to furnish the supplies or services and the buyer to pay for them. So unless you have a legally binding contract in place that obligates the seller to sell and the buyer to buy, you don't have a contract under FAR. So, and typically in a retail situation, neither party is obligated to either buy or sell to the other right up until the point of purchase. So a few things to keep in mind about mandatory clauses if you're a prime contractor. First, you have to read or be familiar with each FAR or DFARS clause that's included in your contract to know which have mandatory flow down provisions. Also, a large majority of FAR and DFARS clauses that are inserted into a contract are just incorporated by reference, meaning instead of inserting the full text of the clause, the contracting officer will instead insert a long list of FAR and DFARS clause numbers with a statement saying that all of the clauses are incorporated into the contract. And if you're not familiar with the clauses, you need to check them to see if they have mandatory flow down provisions. Now, there are some places online where you can see what the clauses say, and we've listed a few of them in the slide. Another thing to keep in mind is that some of the clauses may only have to be inserted into subcontracts that exceed a minimum dollar threshold. Some clauses will list a dollar amount, or some will refer to the simplified acquisition threshold. And then lastly, some clauses will state that they don't have to be inserted into certain kinds of subcontracts, like subcontracts for commercial off-the-shelf items, for example. So it's important to pay attention to these exclusions, particularly if you want to keep a subcontract from becoming unnecessarily long or complex. Now, there are over 100 FAR and DFARS clauses that have mandatory flow-down provisions. And the typical government prime contract, in my experience, has over 100 FAR or DFARS clauses that are incorporated by reference and over 50 clauses that are written out in full. So it may take some time to go through all of the contract clauses to see which ones have to be flowed down to your contracts, your subcontracts. But if you're a prime contractor and your only subcontracts are to acquire or use commercial items in order to perform under the government contract, you're in luck. The universe of mandatory flowdowns for commercial item subcontracts is reduced dramatically. So let's talk about commercial items. The commercial item is defined in FAR 2.101, and that FAR regulation describes 8 categories of items and services that are considered commercial items. And we're not going to go through all of them in detail now, but at the risk of overgeneralizing, commercial items are items other than real property that are customarily used by the general public or non-government entities for non-government purposes, and they have to be sold, leased, or licensed to the general public or offered for sale, licensed, or leased to the general public. Now, there are a variety of variations and combinations of commercial items that are listed in FAR 2.101, and services in support of these commercial items are also themselves considered commercial items. And then lastly, commercial off-the-shelf items are a subcategory of commercial items. And these are items that are sold in substantial quantities in the commercial marketplace, and they're offered to the government in the same form in which they're sold or offered in the commercial marketplace. So again, if your subcontract is to acquire a good or service that is a commercial item, for example, if your company is a reseller or uses commercial items to develop the product or service that it offers to the government, in those instances, you're in luck. That's because typically a contracting officer will insert into the government contract one of 2 FAR clauses that reduces the number of mandatory flowdown clauses that a contractor has to insert into commercial item subcontracts. Now, if the prime contract with the government is itself a contract to provide commercial items to the government, the contracting officer will insert FAR clause 52.2125. And if the prime contract is not for a commercial item, the contracting officer will insert FAR clause 52.2446. Now, each of these 2 clauses limits the number of FAR clauses that have to be flowed down to a commercial item subcontract. And specifically, under 52.2125, prime contractors have to insert at most 23 clauses that are identified in that FAR clause, while under 52.2446, prime contractors are required to insert at most 19 FAR clauses that are identified. Now, one thing to note is that the 2 lists of mandatory flowdown clauses in 52.2125 and 52.2446, while they're largely overlapping, they're not identical. But still, in the case of a commercial item subcontract, if you're a prime contractor, you don't need to go through all of the 100 or so clauses in your prime contract to see which ones are required to flow down into your subcontract. You can just go to clause 52.2125 or 52.2446, and the mandatory flowdown clauses will be listed for you in one place. Now, you still need to go through the 19 or 23 mandatory clauses to see if each should be included in your subcontract, because some of the clauses have their own exclusions based on the dollar amount of the subcontract or the type of the subcontract. Now, 52.2125 and 52.2446 both say that the contractor may flow down to the commercial item subcontracts a minimum number of additional clauses that are necessary to satisfy contract obligations. And the key word here is minimum or minimal. Now, if you go back to the implementing regulations for 52.2125 and 52.2446, there's an implicit acknowledgement that mandatory flowdown clauses can make subcontracts more complicated. And those regulations say that the reason for the streamlined flowdown provisions is to encourage the use of commercial items in government contract deliverables. So if you're a prime contractor, you need to keep that in mind when you add additional flow down clauses to your commercial item subcontract. So if you're a prime contractor and you figured out which mandatory clauses need to be flowed down to your subcontracts, the next issue you face is, well, how should these clauses be inserted into your subcontracts? Now, I mentioned earlier that contracting officers will typically incorporate most FAR clauses by inserting a long list of FAR clause numbers rather than inserting the full text of the clauses. And FAR 52.102 encourages this. It says provisions and clauses should be incorporated by reference to the maximum practical extent rather than being incorporated in full text. So the question, if you're a prime, is, well, should you flow down all of your clauses by incorporating them by reference? And the short answer is no. First, can you incorporate the whole prime contract by reference? Well, no. There are a number of court decisions that have said that a blanket statement incorporating the entire prime contract, or that says a subcontractor assumes all of the obligations under a prime contract, well, these blanket statements are not adequate to put the subcontractor on notice that a FAR clause is part of the subcontract. So FAR clauses should, at a minimum, be referred to specifically by their title number and by their title. And if you incorporate by reference, there still has to be some modification or explanation that makes the references to the parties in a FAR and DFARS clause applicable to the prime contractor and the subcontractor. But there are definitely instances in which contractors should include the full text of the FAR clause, again, modified to identify the parties. And in fact, there's one Federal Circuit Court of Appeals, and that's Insurance Company versus Aberdeen, that has said that if there's specific language in a FAR clause about how it's to be included, then that specific language supersedes the general principle that FAR clauses can be incorporated by reference. So in Aberdeen, the court pointed to language that required the FAR clause to be, quote, inserted into the subcontract as the specific language. So the better practice is to look to the flow down provision itself to see what it says about how it's to be included. Now, unfortunately, the drafters of FAR are not always consistent in their language, but if the language in the clause says that the contractor must include or incorporate the substance of the clause in all contracts or include the requirements of the clause, then it's more appropriate in those circumstances to incorporate the clause or include language that paraphrases the clause. If, on the other hand, there's more specific language, and you'll see this with clauses that impose EEO requirements, where drafters specifically instruct the contractor to insert the terms of the clause or to insert the terms and conditions of the clause. In those instances, it's better to include the full text of the clause. So, besides mandatory flow down clauses, prime contractors should flow down additional clauses from their government contracts. And we talked earlier about commercial item subcontracts and the relatively few mandatory clauses that are required to be inserted. But there may be instances in which a prime contractor may want to flow down one of the mandatory clauses that apply to non-commercial subcontracts anyways. For example, say if you're a prime contractor and you're working on a DoD contract, but you're buying commercial or off-the-shelf items to support the contract. Well, now DoD contracts now routinely include a DFARS clause that requires safeguards against disclosure of covered contract information, and that clause has mandatory flow-down provisions. Well, there are no DFARS clauses among the mandatory commercial item flow-down clauses. But if there's a chance that you might need to disclose technical covered defense information to your supplier or vendor, you may want to flow down the DFARS safeguards clause anyway to ensure that information stays protected. So in my view, For commercial item subcontracts, the first place to start in terms of considering optional clauses is the set of mandatory flow downs that are in your prime contract but are not listed in clause 52.2446 or 52.2125. Now, in addition, any clauses that alter the contracting relationship in a significant way should be flowed down. For example, if there are provisions that allow the government to end the contract or to make changes under certain conditions, well, those should be flowed down so that the prime can end its contract and can make corresponding changes to its subcontract. And same thing for clauses that allow the government to change pricing. And then lastly, if a prime contract has a disputes clause that imposes requirements, such as a continuation of work during the dispute, well, the prime contractor should include a disputes clause in its subcontract that subjects the subcontractor to similar requirements. So the last thing I want to touch on are common issues that come up. So it's not uncommon, especially for contractors that are just emerging into prime positions, or smaller contractors that are in a prime position, say during a set-aside procurement, to get some pushback from the other party. Now, sometimes what they will hear is, hey, this is how we've always done it. We've never had any problems. And all I'll say is that there's a bit of sloppy flow down management out there. And don't worry, we've always done it, never had a problem. Well, those comments, there's only so much comfort, I think, that you should take from those comments. Remember, if you are a prime contractor, you have ultimate responsibility for your contract performance. And it's your proverbial neck that's on the line. So at a minimum, if you're a prime contractor in a weak negotiating position, you should at least understand where there is potential exposure and then make a business decision about moving ahead with the subcontract terms that are proposed. Other common mistakes are subcontracts that include all of the FARS or DFARS clauses that are inserted into the prime contract. For example, sometimes the entire FAR clause addendum is just copied and pasted into the subcontract. Well, the problem is that there are some FAR clauses that logically can't apply to subcontractors. But also, if you're a sub, there's no reason to share in every single obligation that a prime is under. And similarly, sometimes a prime will propose a flow down addendum that has every possible flow down clause in Part 52 or Part 252. And sometimes they include clauses that are not even part of the prime contract. Well, if it's not part of the prime contract to begin with, or if it's a mandatory clause that a subcontract is excluded from, a subcontractor should probably think twice about agreeing to it. Now, all of this is to say that there is a reasonable balance that contractors can and should reach between, on the one hand, keeping a subcontract from becoming too long and unwieldy, and on the other hand, putting the subcontractor on notice of the FAR and DFARS clauses and obligations that it's under. Well, that's all I have for my presentation. I want to thank everyone for listening, and if you have any questions, please don't hesitate to contact me.
Great information. Thanks, Mark, for covering this hot topic, and thanks everybody for joining us today. You can contact Mark at either his phone number or email address, which are both on the screen. Next week, our series continues with various topics, including cost proposals, creating indirect rates, GSA schedules, maximizing profitability in firm fixed price contracts, and mastering Section L and M of the proposal. Again, those are next week's topics. All of the webinars up through that point have been recorded and are on our website under the webinar section. Thanks again, everybody, and thanks again, Mark, for presenting today.
Thanks.